What is the Fed doing with interest rates? The Federal Reserve, or the Fed, is having their next meeting from January 31st to February 1st to decide on how much they should raise interest rates by. The last time they met back in December, they bumped up the federal funds rate to between 4.25 and 4.5%. But what does this actually mean? Well, it's the Federal Reserve's job to manage the supply of money in the US economy. One way they do this is by setting the federal funds rate. This interest rate is what banks charge one another when they lend or borrow overnight to meet certain capital requirements. Basically, the banks have to end each day with a certain amount of money to prove that they're liquid. This federal funds rate just doesn't stop at impacting overnight bank rates though. It is used as a reference point for many other rates out there in the market, so there's a ripple effect anytime there's a change in that base rate. When the Fed raises rates, their goal is to increase the cost of credit throughout the economy. Higher rates make loans more expensive for businesses and consumers like you and me. This is done in order to ultimately reduce the supply of money in circulation, aka they're trying to cool off the economy because they think it's running a little too hot and inflation is higher than they would like. If we think about this in another way, as rates increase, we as consumers are incentivized to save and earn more interest than we are to take out a loan and make a big purchase. The idea behind this is that the more people who make this trade-off to save more, the slower the economy will grow because people are spending less, and this in turn helps to reduce inflation, which has been a major concern and focus for the Fed for a while now. And that is just the tip of the iceberg when it comes to the Fed and interest rates, and I'm looking forward to seeing what the Fed's take is on the economy and interest rates here at the beginning of February. Overall, the Fed plays a very important role for the US economy, and when they make an announcement or make changes to the federal funds rate, investors and consumers are listening. Thanks for watching the video, and I hope this provides a little more context as we're headed into a period where I'm sure interest rates will be a hot topic of conversation. If you haven't already, please hit the like button and subscribe to the channel. And with that, I'll see you in the next monthly briefing.